Hi, everybody. It's Peter Schiff. This is Wednesday, January 26, 2011. Well, last night I watched President Obama's State of the Union address, and once again, the president passed up on an opportunity to level with the American public and tell them the truth and try to do something to head off the economic crisis that is staring us in the face. In fact, in the history books, if they rewatch this State of the Union address, they will be very surprised to see how calm everybody was and the words that President Obama spoke on the eve of the greatest financial or economic collapse in U.S. history. Now, maybe we'll make it to the next State of the Union address. I'm not sure. But clearly, President Obama has no idea the gravity of the situation. He believes that the economy is recovering robustly. Nothing could be further from the truth. We are not recovering. He is helping to dig the economy into a deeper ditch. We are going deeper into debt. In fact, part of the president's speech, he said that he wanted to reduce the deficit by $400 billion over the next 10 years. And of course, it doesn't actually reduce the deficit. I think what it does is it reduces the rate of increase, assuming that we actually get these supposed cuts passed. Well, today we found out from the Congressional Budget Office they increased the estimate for this year's deficit by $400 billion this year alone. That is equal to everything President Obama is trying to save over the next 10 years. And we've already increased the deficit by that much in this year alone. You know, also in the President's State of the Union address, what he really talked about was the government spending more money. And now he tried to dress it up in a different package by claiming it wasn't spending, it was investing. But it is spending. Whether if he wants to say we're investing in education, well, we're spending money on education. And in fact, we're not even spending it on education. We're spending it, we're calling it education, but we're not really educating anybody. And in fact, we have plenty of people with college degrees that are unemployed right now. Do we really need to waste more money encouraging even more people to go to college, to major in some humanity, to graduate with no real marketable skills, with tens of thousands in debt, and then just join the ranks of the unemployed? That's not going to help the economy. Spending on infrastructure isn't going to help the economy. I mean, the president talked about high-speed trains. I mean, we're broke. High-speed trains would be great. We can't afford them. And in fact, when we do have them, it's got to be the private sector that creates them in response to legitimate market demand, not political interest. I mean, President Obama wants to micromanage the economy. He wants the government to invest in the things that he believes in. But, you know, that's not what you want. You know, when my father went to the World's Fair in 1939, the idea was that there was the land of tomorrow, and all the houses in their driveways, there was helicopters. Because the helicopter had been invented, and somebody believed that, well, everybody's going to have helicopters. Well, what if the government decided that? What if some version of Barack Obama decided that we're all going to be flying around in helicopters instead of driving cars? What a colossal waste of money that would have been. Look, nobody knows the future, least of all politicians. We need investments to be made by the market, not by government. And we're not going to do that until we stop spending and start saving, until we repeal government rules and regulations that are making us uncompetitive, until we get rid of Ben Bernanke and have a competent Federal Reserve chairman. You know, they came out today. We got the Fed announcement, and they voted unanimously, no dissent this time, to continue 0% interest rates, to continue with quantitative easing, even though it's already backfired. Remember, the stated purpose of quantitative easing was to get long-term interest rates to fall. Instead, they've risen sharply. And instead of getting the message that they're doing something wrong, they're just continuing to repeat their mistakes. And of course, what did bonds do today? They got clobbered. And commodities soared today. The dollar went down. I think the dollar index hit a new low for more than 2 months. And we did get a resurgence in gold and silver, which had been correcting up until today. I think in response to what President Obama said last night and to what the Fed said today, that it is full steam ahead, put the pedal to the metal. You know, it won't be before too long where the Federal Reserve will be the single largest source of funds to the Treasury, eclipsing the taxpayers. All we're going to be doing is spending printed money, which is a recipe for runaway inflation, and that's why people are buying stocks, and that's why the smarter people are buying commodities and buying foreign stocks, and getting out of the dollar. You know, I think the most frustrating thing at all that I found out yesterday, the government had put together this commission to try to identify the source of the financial crisis, right? And I did a whole video blog about that. I think I wrote down here somewhere when that was October 1st, 2009. I did a video blog. You can find it on my YouTube channel. You can see it on Schiff, on Europac.net. But as soon as they convened this commission, I knew it was a political farce. I said that this was reverse engineered, that they really don't want to know why there was a financial crisis. After all, if they did, they would have contacted the people who predicted it. I mean, I tried to get to be a witness. I contacted the leading Republican heading up this commission, trying to volunteer to testify. You know, nobody would have me. And so my feeling was, look, they didn't want to know why there was a financial crisis. They were using the financial crisis as an excuse to grow government, that this whole thing was a charade, that they had a preconceived conclusion, and all they were going to do was bring on witnesses that supported that preconceived conclusion. And that's exactly what happened. In fact, if you read, there was a minority report written. I read that, and that, you know, pretty much got it right. But it confirmed all of my suspicions of a year ago that this was a political farce. And here's what this commission concluded. and what it concluded that the housing bubble was not caused by the low interest rates of the Federal Reserve, that it was not caused by Freddie and Fannie and the moral hazards of all the mortgages they insured, that it was not caused by the government requiring or forcing lenders to extend mortgage credit to less than creditworthy borrowers in an effort to spur home ownership among minorities. No, that's not what caused it. In fact, those are the three primary causes, and they dismissed them. No, what did the commission conclude? That the crisis would have been averted if we just had better regulations, if we had more regulators, if we had more oversight. I mean, come on. We had so many regulators that didn't see this coming. Do you really think if we had a few hundred more or a few thousand more, it would have made a difference? In fact, they even went on to say that part of the problem was that they let Lehman Brothers fail. The conclusion was that was a mistake, that we should have bailed them out. So in other words, this commission came to the exact opposite conclusion. And, you know, who's got more credibility? The commission, right, where the people in this commission were completely surprised by the financial crisis of 2008. They had no idea it was coming, yet they concluded that it would have been prevented if we just had more government oversight, right? Or me, I completely nailed the crisis. And, you know, if you haven't read Crash Proof, you know, again, if you haven't seen my video, Peter Schiff Mortgage Bankers, watch that video presentation on YouTube. Just type in Peter Schiff Mortgage Bankers. Here's what I said at a conference in 2006. I was saying this at conferences all over the country in 2005, 2006, 2007. But not only did I go over the details, but I said specifically that the problem was being caused by the Fed, by Fannie and Freddie, by the FHA, by government mandates. It was I identified government interference and the Fed as the causes, and I outlined what was going to happen when the whole thing burst. So I think I've got a lot more credibility on this. I'm trying to get the guy who authored the Minority Report to be a guest on my radio show, the Peter Schiff Show. I called him today. I wasn't able to get through to him. Hopefully he will be a guest. By the way, you know, if you're not listening to that show, really tune in. We talked a lot about the President's State of the Union address on my show earlier today. We're going to continue to talk about the Federal Reserve, and I can get into much more detail on the show because I've got 2 hours, although some of it is commercials, but I still have a lot more time than simply the 10 minutes that I have on this video blog. So if you're not listening, remember, you can listen to Schiff Radio at schiffradio.com. The new live show is from 10 a.m. to noon Eastern Time, Monday through Friday. But if you can't listen live, you can always listen delayed on schiffradio.com. Anyway, thanks everybody for listening. We'll see what happens. I might be able to blog again on Friday, particularly if we have some more serious developments in the commodity markets, in the dollar, in the bond market, and the stock market. Anyway, take care everybody, and bye for now.